All right, Markets Desk is hitting the movers board right now because the index tape is soft, but the small cap board is loud. SPY's down a touch. QQQ's heavier, off about 6/10. VIX isn't screaming. So when XPON is up 134% on 20 million shares, that's not market beta. That's special situation flow. Highlight that one first. Then FLZH, ugly, down 72% at 27 cents. High risk tape, not a dip buy story just because it's down. SDOT right under it, up 69%, 8.3 million shares, 11 times normal. And BTCT, oof, 46 million shares, 382 times relative volume. That's the kind of volume number where the markets desk stops scrolling and opens the chart.
All right, top of the hour reset here from the macro desk. It's 9:02 a.m. Eastern, and the tape is mixed, not broken. SPY's at 764.45, down 0.17%. QQQ is the laggard at 708.93, down 0.63%. IWM's barely red at 299.72, down 0.08%, and VIX is actually a touch lower at 18.90. So that's the first tell. This isn't a panic tape. If tech is red and vol isn't really lifting, that's usually more positioning and digestion than everybody running for the exits. QQQ is basically the mood ring this morning, and right now the mood ring says, little cranky, but not throwing furniture. The cross-asset story is the interesting part. Bonds are bid, TLT up 0.50%, IEF up 0.15%, so rate pressure is not the obvious villain for tech this morning. The dollar's firmer, up 0.22%, yen is basically flat. Gold is catching a real safety bid, up 1.15% to 428.24, while oil is down 1.24% to 132.97. That mix says the market's risk thermostat is turned down a notch, but not shut off, because crypto proxies are green. BITO up 2.5%, Coin up 1.83%, NSTR up 2.95%. What I'm watching from here, QQQ around 708.50 on the downside and 709.50 on the upside. VIX around 19, oil holding under 133, and the Chicago Fed Activity Index at 12:30 Eastern, estimate 0.1. Coming up after the reset, we've got the mover scan, then the news intermission, which, yes, is where the weird stuff usually hides. Thanks, Markets Desk. Quick macro check. All right, this is not a full-on risk-off tape yet, but it is a little weird under the hood. SPY sitting around 764.45, down 0.17%. QQQ's weaker at 708.93, down 0.63%. And IWM's basically flattish, down just 0.08%, near 299.72. So the pressure is concentrated in NASDAQ, not everything. And look at VIX, 18.90, actually down a hair, off 0.26%. That's the market saying, I'm annoyed, not terrified. Very big difference. Now the bond side matters here. TLT's up 0.5% at 82.46. IEF up 0.15% at 92.96. So duration is catching a bid. That usually takes some heat off growth, which makes QQQ lagging even more interesting. This is not a clean rate scare. It's more like mega cap tech is carrying a heavy backpack while the rest of the market's trying to walk normally. Now cross-asset. Here's the chain. Dollar's firmer, up 0.22% at 27.96, while the yen proxy is basically flat, down 0.03% at 57.685. So no huge FX fire drill, but the dollar is still leaning on global risk a bit. Gold's bid too, 428.24, up 1.15%. Oil's going the other way, down 1.24% at 132.97. That combo says safety bid, but not an energy panic. Inflation's the guest who won't leave, but at least this morning it didn't bring the crude oil karaoke machine. And then crypto's doing its own thing. BITO up 2.5% at 10.67. Coin up 1.83% at 189.90. NSTR up 2.95% at 122.77. So risk appetite isn't dead. It's selective. Here at the macro desk, the levels I'm keeping on the screen are QQQ around 708.9, VIX around 19, TLT holding that 82.46 area, and the dollar at 27.96. Calendar-wise, no 8:30 grenade today. Chicago Fed National Activity Index hits at 12:30, estimate 0.1, so that's the next macro breadcrumb. All right. Quick macro map here. The macro desk is zooming out, while everyone else is staring at 1-minute candles like they owe them money. The headline is not panic, it's selective de-risking. QQQ is the weak link, down about 0.6% around 709.16, while SPY is only off 0.16 at 764.50, and IWM is barely lower around 299.66. And the TEL, VIX is actually lower, sitting 1886, down about 0.5%. So if NASDAQ is red and vol is not catching a bid, that's not the market yelling fire. That's somebody letting air out of the mega-cap tech balloon. Bonds are bid too. TLT up 0.5% at 82.46. IEF up 0.15 at 92.96. Usually that softer rate tone helps growth. But today, tech is still heavy, which says positioning around AI and mega-cap earnings is overpowering the rate relief for now. Now the cross-asset part is the good bit. The dollar proxy is firmer, UUP at 27.96, up 0.22%, and the yen proxy is basically flat to lower at 57.685. So FX is not screaming crisis, but a firmer dollar is still the quiet bouncer at the risk asset party. Nobody notices him until he starts moving people toward the door. Gold is bid, GLD up 1.15%, around 428.24, while oil is offered, USO down 1.24 at 132.97. That combo matters. If this were pure geopolitical fear, you'd expect oil and gold both to catch a bid. Instead, gold is acting like a hedge, oil is bleeding out pressure, and equities are just digesting tech concentration. Meanwhile, crypto proxies are green. BITO up 2.5%, coin up 1.8, NSTR up almost 3. So speculative appetite is not dead. It's just being picky. On my macro board, UUP 28, TLT 82.50, GLD 428, VIX 19, and that 12:30 Chicago Fed activity number with estimate at 0.1.
Thanks, Macro Desk. Quick stock whisperer check here. I just put XPON into the simulated book. This is the broadcast paper trading portfolio. Not something to copy, but I want you to see the logic. XPON cleared that 8.75 spike trigger. Relative volume was still exceptional, so I took 250 shares long at 9.29. Right now it's basically flat, 9.2912, about 30 cents of unrealized P&L, so there's no victory lap. The setup is momentum holding above the breakout zone. If it starts losing 8.75, the thesis is wobbling. If it hits the hard paper stop at 8.35, I'm out and I grade it as a failed momentum attempt. Around that, the rest of the book is pretty clean. XLRE is doing its job. 200 long from 44.95, now 45.17, up about 44 bucks. With the paper stop at 43.90 and take profit sitting at 47.20. XOM is the one I'm grading harder. 60 long from 165.90, now 164.50, down about 84 bucks. That one needs to defend 162.60 or the bracket handles it. Upside order is 172.40. Back to XPON. The paper take profit is 11.25, but the cleaner tape read for me is 10.25. Above there, buyers are still pressing. Below 8.75, momentum failure, and the outside watch stays NVDA above 216.50 if QQQ firms up. Coming up, News Intermission has the bigger catalyst board. Here at the Stock Whisperer, it's thesis, level, defined risk, then honest grading. Thanks, Stock Whisperer. All right. Markets Desk is back on the movers board. And yeah, This thing is still loud. QQQ's down 6/10, SPY's barely red, VIX is actually lower, so the index tape is mixed. But the small cap board is doing its own thing. XPON, still sitting on top. Huge move. We've already got that one on the scorecard. SDOT and BTCT2, not rehashing those. Fresh tape now. FLZH is the ugly one, down 71% at about 28 cents. Then I want PMI, LISI, and RITR, because those are the next real volume stories.
Thanks, Stock Whisperer. Breaking news first. Shein is seeking up to $1.8 billion in its long-awaited Hong Kong IPO. ProTerminal's newsroom is tracking a filing for 280 million shares, with a planned debut on September 1st. The big number here is the valuation reset, around $27 billion now, down from prior peaks. And that's the market read right there. Growth is still valuable, sure, but growth with regulatory pressure and tighter margins gets a haircut. What we don't know yet is the final book demand, the clearing price, and whether institutions treat this as a cleaned-up reset or just a cheaper version of the same risk. No public ticker on this one yet. This is an IPO watch, not a chart trade. Next headline. Hedge funds are ramping up shorts against the US dollar ahead of Besant's fiscal plan, including a push to double buybacks of longer-dated treasuries. Why it matters? That's not just a currency story. That's a funding cost story, a global liquidity story, and eventually an earnings translation story for the big multinationals. Here's the funny part. Positioning is leaning against the dollar, but our live dollar proxy has been firm around 27.96. And the 28 line we flag is still the clean scoreboard. Macro loves making crowded trades uncomfortable. It's basically its hobby. And the global growth file. China is preparing roughly $119 billion of stimulus to counter sagging investment, but the desk is seeing delays in the rollout. That timing matters. Stimulus is like coffee, much better before the meeting is over. For markets, this hits the commodity complex, China-linked equities, supply chains, and the Asia growth read. The level check is important too. Oil is still soft, with USO around 132.97 after already losing the 133 area earlier. So the commodity tape is not exactly throwing confetti at the headline yet. Coming up, we'll kick it back to the movers board and see what single names are actually reacting. Thanks, Markets Desk. Quick news brief from the macro desk, and we're starting with the dollar. Headline here, hedge funds are ramping up shorts against the US dollar around Treasury Secretary Besant's fiscal plan, including a move to double buybacks of longer-dated treasuries. The why it matters piece is pretty simple. If big macro funds are leaning against the dollar, they're making a statement on fiscal sustainability and global capital flows. Funny part? The dollar proxy is still around 27.95 this morning, a little firmer. So the positioning says one thing, the live tape says, cute story, prove it. Next one. China's roughly $119 billion stimulus answer to sagging investment is coming late. ProTerminal's newsroom is tracking a planned stimulus push aimed at weak investment, but the rollout delay is the key detail. For markets, that matters because China is still a major swing factor for global growth, commodities, industrial demand, and Asia supply chains. You can see the sensitivity already, with oil sitting around 132.97, down about 1.2%, while gold is up around 428.65. That's not a victory lap for growth. That's the market keeping one hand near the seatbelt. Now, the IPO story. Shein is seeking up to $1.8 billion in a long-awaited Hong Kong listing. The filing is for 280 million shares, with a planned debut on September 1st. And the valuation is around $27 billion, well below prior peak levels. Why it matters? This is a real-time test of investor appetite for fast-growth consumer and e-commerce names under regulatory pressure and tighter margins. Growth stock going on sale before it even gets a ticker is, honestly, very 2026. Bond desk headline. PIMCO says bonds still look attractive with term premium elevated. The setup is that even with yield volatility, long-dated government bonds may still offer appeal for yield-focused investors, assuming there isn't an unexpected recession shock. This matters because term premium is basically the market charging rent for duration risk, and rent annoyingly keeps going up. On the tape, TLT is around 82.40, up about 0.4%, and IEF is near 92.90, slightly green. So bonds are still catching a bid this morning. Last one for this brief. The Bank of Japan is set to offer clues as markets bet on a possible September rate hike. The actual headline is about communication. Not a guaranteed move, but that's still important because Japan has been the anchor of cheap money for a long time. If that anchor shifts, it can ripple through yen crosses, global yields, and Asian equities. Yen proxy is around 57.69, basically flat to slightly lower right now, so no fireworks yet. But if the BOJ changes the tone, the carry trade gets a little less free lunch. Coming up, we'll kick it back toward the movers board and see what's actually paying traders this morning. All right, quick newsroom lap from the macro desk. Europe first, because the global cycle is doing its little Monday morning jog. Headline: Eurozone business activity edges up on a manufacturing surge. Flash PMI data has the composite at 52.1, with manufacturing at 52.8. So still expansion, not fireworks, but expansion. Why it matters: Europe has been the soft spot everyone likes to dunk on, and this says activity is holding up, even with inflation and geopolitical noise still hanging around. For markets, that can support cyclicals and the euro side of the ledger. But with the dollar still firm around 27.95 on UUP, it's not exactly a clean risk-on confetti cannon. Next headline: Germany and several EU countries are pushing for a windfall tax on energy profits. The countries named here are Germany, Italy, Spain, Austria, Poland, and Portugal. And the idea is an EU-wide tax response to elevated energy prices. The investor read is pretty straightforward. This is regulatory risk for energy producers and utilities exposed to Europe. Margins, cash returns, capex plans, all of that gets a little more political when governments start reaching for the profit jar. Dry macro joke, but true. Nothing says stable investment climate like a surprise tax meeting. Staying in energy. Headline: Hedge funds have cut bearish bets on European diesel to a 2-year low. That means the short side is backing off the idea that diesel demand is just rolling over. Diesel is the boring macro tell. Trucks, factories, freight. The real economy wearing steel-toed boots. Why it matters? Less bearish positioning can cushion the energy complex if demand holds up or supply tightens. But here's the tension. Oil on our tape is still softer, with the oil proxy around 132.97 and down a little over 1%. So the positioning story is improving, but price is not fully agreeing yet. Now the single name catalyst lighting up the movers board. Expion announces asset acquisitions to establish an oil and gas exploration platform. XPON is trying to pivot beyond energy storage, aiming at natural gas supply for AI data centers and LNG export markets. And they're also bringing in a new CEO with operating and capital markets experience. Why it matters: AI power demand is becoming a real macro trade, not just a chip stock story. Expion is around 8.33 pre-market and up huge, so the tape is clearly reacting to the pivot. The big question is execution. Assets and headlines are one thing, producing cash-flowing energy supply is the hard part. Last one. Innovative Eyewear announces a strategic alliance with HTC. That's Lucy. And the headline is about expanding reach in smart eyewear and the AR/VR ecosystem. The stock is trading around 1.02 and up sharply, so this is getting attention. But the macro desk read is simple. Partnerships can validate a product category. They don't automatically prove demand. Investors will want to see commercial traction after the headline. Coming up, we'll kick it back into movers mode because this pre-market board is still pretty lively.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board, and this tape is still picky. SPY barely red, QQQ down about 6/10, VIX not really panicking. So when a small cap is up 40, 60, 100%, that's not broad market strength. That's stock-specific heat. Top of the board, XPON still the monster, up around 138% on 26 million shares. FLZH is the wreck, down 72%, still trading under 30 cents. SDOT's up 61%, LGHL almost 48%, Lucy still sitting right around that $1 zone, and BTCT, oof, 40% green with insane relative volume. So yeah, board is loud, now we're going chart by chart. No wasted words. XPON first, pulling the 1 minute. This is the kind of name where the green number can fool you, because yeah, it's up 138%, but the actual tape is what matters now. Price is around 8.118, volumes over 26 million, relative volume about 25 times normal. That's real attention. Float shown around 10.7 million, so this thing has already churned hard pre-market. The line I care about right here is $8. Clean, simple. If XPON loses 8, especially with 1 minute candles closing under it, that squeeze starts looking tired fast. If it keeps holding 8 and buyers keep refreshing there, okay, then the board leader still has a bid. But I'm not chasing the headline percent. I want to see whether 8 is support or whether it turns into the trapdoor.
Thanks. Markets Desk? All right, Macro Desk into the bell. This is the whole mood board. We're about 7 minutes from 9:30, and the equity tape is soft, but not exactly screaming fire drill. SPY's at 764.30, down 0.19%. QQQ is the laggard at 708.85, down 0.64%. Russell's off 0.13%. But the funny little tell here, VIX is 18.86, actually down about 0.5%. So yeah, stocks are red, but vol is not getting paid like there's a monster under the bed. That's more selective de-risking than panic. Now look across the street. TLT's 82.40, up 0.42%. IES up a touch. Dollars firm with UUP around 27.95. Gold is bid at 428.65, up 1.25%. And oil is leaking lower, with USO at 132.97, down 1.24%. That's the chain right there. Bond bid says growth worries or duration demand. Firmer dollar leans on commodities. Gold still has a haven bid. Oil's losing some premium. The question into the bell is simple. Does lower yield oxygen help tech breathe, or does the dollar keep stepping on the hose? Here's the bell checklist here at the Macro Desk. QQQ is parked around 709. Below 708.15, sellers can lean on that pre-market low. And above 710.05, that little overnight range finally gets some air. Dollar next. UUP 28 is the clean round number line. If that keeps pressing, commodities and overseas earners probably don't love the vibe. Bonds. TLT 82.40 is the level for whether this bid in duration actually sticks after the open. Oil. USO 133 is the reclaim or reject spot after that earlier slip. And crypto is off in its own corner, wearing sunglasses indoors. BITO up 2.79%, Coin up 1.73%, MSTR up 3.06%, while Nasdaq is red. That tells you risk appetite isn't dead. It's just picky and possibly over-caffeinated. No huge 9:30 data grenade today. Chicago Fed isn't until 12:30 Eastern. So the opening auction is going to be about positioning, rates, and whether mega-cap tech can stop dragging its feet. We're right on the edge of the bell now. Coming up, small cap momentum gets the first look at the messy stuff when the cash market opens.
Thanks, Macro Desk. Let's pull up INCR, because this is the small cap runner where the headline looks big, but the chart still has to prove it. Market tape's not exactly screaming risk on. QQQ's down about 0.2%, SPY slightly red, breadth mixed. So a roughly $66 million healthcare cannabis name up 30+%? Yeah, it earns a look. But small cap, wide candles. Don't let the percent move do the thinking. Oof, look at the shape here. INCR built that early base in the 5s, call it 530 to 560. Then the real ignition candle comes when it punches from about 585 up through 620. And that wasn't just air. The volume spike was close to 20,000 shares on that push, which matters for a name that normally averages around 76,000 shares a day. Now here's the catch. The move already tagged as high as 650, and since then it's not clean trend. It's chop flag. The working box is $6 to 635. No clean VWAP number in this package. So the markets desk is using structure. 610, 620 is control, 635 is the reclaim line, 580 is the danger line. If 635 clears with actual volume, okay, momentum is trying to re-engage. If 580 cracks, that breakout starts looking tired fast. Quick catalyst check, because this one actually has a headline behind it. 7 a.m. press release. Intercure finalized a NIST $230 million settlement, roughly $77 million, tied to war-related indirect damages. Against a market cap around $66 million, that's why scanners wake up. Big headline versus small cap. Simple. But headline size and tradable liquidity are not the same thing. Now flip to the dilution check, and this part is cleaner than a lot of small cap runners. ProTerminal's dilution center shows low overall risk, no active shelf, no active equity line, no pending S1 in the dataset. Good box to check. Still, cannabis small caps can be nasty. Thin bids, sharp wicks, headline chasers getting trapped. That risk does not disappear just because the dilution page is clean. Back to the 1 minute, and this is the scoreboard. Above 635 with volume, INCR is still acting like a real momentum attempt. Not a prediction, just the level where the tape improves. Below 580, nope, I stop respecting the breakout and start treating it like a possible trap. Day high is 650, so if it gets near there again and volume is fading, watch for that nasty wick. I'm not seeing a halt headline in the data, but into the open, spreads can still get stupid on these. Here at the markets desk, we want proof. Levels first, excitement second. Coming up, we'll rotate right back through the movers board and see who's still holding bid. All right, markets desk is back on the movers board. Let's hit what's actually moving before the bell. QQQ's still down about 0.6. SPY is only off a hair. VIX is red, so this is not broad panic, it's selective. And look at this board. XPON still sitting at the top. FLZH is the ugly one on the downside. SDOT is still hanging in the high beta lane, and BTCT is the insane relative volume name. That's the one thing I care about right now, which moves are still attracting liquidity, and which ones are just air pockets. First up, XPON on the 1 minute. This is still the scoreboard leader, but I'm not going to re-chew the whole story. The level we already put on the board is $8. That's the fight. At 8:01 last print on the board, this is basically sitting right on the line. If it's reclaiming and holding above 8, momentum traders can breathe. If it keeps poking and failing back under, that's where this can turn from breakout to bag handoff pretty fast. Volume is real. 27 million shares already, versus roughly a million average. But on these small names, volume cuts both ways. Great when the bid is there. Brutal when it disappears. So here at the markets desk, I'm watching whether 8 becomes support or whether 8 becomes the offer.
Thanks, markets desk. All right, bell is live. This is the first real vote of the day. SPY opens around 764.7, down a quiet 14 basis points. QQQ is the problem child out of the gate, 709.4, down about 56 bips. So mega cap tech is starting the morning with a little sand in the gears. IWM is barely red at 299.7. VOIX is actually lower at 18.84, and breadth is mixed. So this is not everybody running for the same exit. This is the market opening the fridge, staring at leftovers, and deciding what's still edible. First fireworks are still on the small cap board. DAIC up about 163% at 1.12. Lucy near $1 and up 45%. BTCT up 43% with wild relative volume. PMI up 39%, and XPON still in the runner pile. But the macro tell here at the macro desk is QQQ. 709.60 is the first lid. If tech can't chew through that, the index tape stays heavy, even while the circus tent names keep doing circus tent things. Now zoom out, because the cross-asset board is telling you why the open feels weird. Bonds are bid. TLT is sitting right around 82.40, up 0.42%, while IEF is up just 0.09% at 92.90. So the long end is getting more love than the belly. Duration has a bid, and that usually means somebody somewhere is buying a little insurance. The dollar is firm but not breaking the door down. UUP 27.95, up 0.18%, still hanging just under that big 28 area. Yen's a touch softer through FXY at 57.69, which matters even if you only trade US stocks, because yen weakness is basically the carry trade weather report. Then look at the commodity split. Gold is up 1.25% at 428.65. Oil is down 1.24%, around 132.97. That is not a clean reflation party. That's more like, give me safety, give me duration, but maybe don't make me pay for crude panic premium. For equities, that combo says the morning is about selectivity. If gold and bonds stay green, while QQQ keeps stalling near 709.60, risk appetite has to prove itself, instead of just coasting on the bell. Breaking news from ProTerminal's newsroom. US-Canada trade talks have collapsed and stock futures dipped on the headline. Here's what we know. Negotiations broke down, and the immediate market worry is pretty straightforward. Autos, agriculture, energy, anything with cross-border supply chains now has a little more fog in the model. What we do not know yet, whether this is a negotiating pause, a full breakdown, or what specific policy action follows. That part matters, because markets can price a tariff schedule. They're less good at pricing political smoke signals through a cracked windshield. Cash tape is open now, with SPY around 763.9, QQQ around 707.3, and VIX at 18.84. So this is pressure, not panic so far. But yeah, here at the macro desk, this is exactly the kind of headline that can turn a sleepy Monday into a spreadsheet with teeth. Next headline, Treasury's so-called economic D-Day warning is moving the cross-asset board. ProTerminal is tracking comments from Treasury Secretary Scott Bessent signaling aggressive economic action tied to Iran. And the market reaction is showing up in the usual stress release valves: bonds, gold, crypto, and the dollar. The report points to bond volatility, Bitcoin up about 23%, gold up around 5%, and dollar weakness around the move. On the live board right now, GLD is still bid at 428.65, TLT is sitting right around 82.40, and that 82.40 level we flagged earlier did get tagged. While UUP is 27.95, a touch firmer on the session, so the dollar is not exactly waving a white flag at the open. The why it matters is simple. Geopolitical policy shocks don't just hit one asset, they ricochet. Bonds catch a safety bid, gold gets attention, crypto gets the volatility crowd, and equity multiples get asked if they packed a helmet. And staying with that same macro plumbing, Bitcoin has climbed past 77,000, marking its best weekly run in more than 3 years. That matters because crypto is no longer just some side alley off the risk market. When Bitcoin moves like this, the listed proxies start lighting up too. BTO is around 1070, Coin near 189.72, MSTR near 122.90, all green on the session. Now, quick grown-up note from the macro desk. Crypto is highly volatile, lightly regulated compared with traditional markets, and it can flip faster than a politician at a ribbon cutting. So the read is not chase it. The read is that geopolitical hedging, inflation concern, and speculative momentum are all leaning into the same door at once. Coming up, we'll kick it back to the movers board and see what single names are actually absorbing this tape.
Thanks, Macro Desk. Let's hit NSSC, because this thing is the clean small cap momentum chart on the board right now. QQQ's down almost 1%, tape is mixed, and NSSC is up big. That matters. Price is sitting around $51, day high 51.50, and the move started way lower from that 45 to 46 base. Oof, look at that expansion. This isn't some 2-cent lottery ticket either. Roughly 33.7 million float, Security and Protection Services name. But today, it's trading like a momentum stock. Okay, candles. Early tape was sleepy, mostly 39s into 40. Then it tightened up, built that higher base around 45.46, and then boom. The breakout candle around 46.16 had real volume behind it. Over 100K shares in that 1-minute burst, and it shoved right into 48 plus. That's not a little drift. That's institutions, fast money, scanners, everybody finding it at the same time. Then the next legs took it through 50.80, and finally into 51.50. So here's the market's desk scorecard. 51.50 is the top of move resistance. Above 51.50, buyers are proving they can still press this thing. Below 50, I start treating it like momentum is getting shaky, because the volume is already tapering on the stall. That's the danger with parabolic candles. Gorgeous on the way up, nasty if the bid disappears. Now the catalyst is real enough to explain the attention. NAPCO reported fiscal Q4 and full year 2026 results at 7 a.m. this morning. I'm not going to invent the revenue line or margin line if it's not on this feed right here, but the headline is clean. Earnings print, then volume hits, then the chart breaks. That's the sequence. Market cap's about 1.6 billion, average volume around 443K shares. And today you're getting 1-minute bursts that look way bigger than normal. So the read is simple. It's not random noise, but after an earnings gap like this, the chart has to keep confirming. If the candles stop holding higher lows, the headline already did its job and traders start playing defense. Back to the 1 minute, and this is where I'd keep it tight. The high is 51.50. That's the scoreboard. If NSSC accepts above 51.50 and doesn't immediately wick back under it, momentum is still in control. If it loses 50 with volume, not a tiny dip, I mean a real red candle through it, then that parabolic move can unwind fast. And the bigger must-hold zone from the original breakout is 45 to 46. Lose that, and the whole morning move starts looking like an earnings spike that got faded. For now, strong chart, big volume, but don't worship the candle. Coming up, we'll roll right back into the movers scan and see what else is actually holding up in this mixtape. All right, let's hit the movers board. Market's soft, but the small cap screen is not sleeping. SPY's down a quarter. QQQ's off almost 9/10, IWM's red, and VIX is actually lower, so this is not some clean risk-on tape. That matters. DAIC is sitting top, up about 196% and $1.26. But oof, here's the catch. Relative volume is only 0.56. Shell company bucket, high dilution flag. That is not the same flow profile as XPON, which is still up huge, with 33 million shares traded and 32 times relative volume. FLZH is the other side of the board, down 71% at 28 cents. Ugly tape. SDOT is still green after that 21 hit earlier. LUC got that $1 reclaim hit, and BTCT is just silly relative volume, 445 times. So we're going chart by chart now, fast. First up, DAIC, because a 196% headline with light relative volume, that's either early discovery or a trapdoor. Thanks, Markets Desk. Quick Stock Whisperer paper book check. All right, so here at the Stock Whisperer, we just opened the XPON short in the show's simulated paper account. 250 shares short, average price 7.83, basically flat right now. The setup is simple. XPON had the opening spike, then broke that 7.80 failed momentum warning level. When a small cap runner loses the reclaim zone that fast, I don't want to be chasing it long. I want defined risk or nothing. So the bracket is already on. Stop is up at 8.15. Take profit order is down at 6.25. The cleaner confirmation level from here is $7. If it can't hold 7, sellers are still in control. If it reclaims 8.15, the short thesis is wrong, and the paper bracket handles it. Not a recommendation to copy, just the broadcast paper book, thesis to level to risk. Rest of the book is pretty contained. TLT short is slightly red, down about 350 unrealized, so no drama there, but bonds did catch that bid earlier, so I'm not adding. XLRE is the bright spot, long 200 shares, up about $30, letting that one work. XOM is the problem child, long 60 shares down roughly 91,
and with oil acting heavy, I'm watching that one closely, but the bracket is still the bracket. Cash is about 63.6, so we're not overextended. For me, the next decision point is XPON. Either it confirms below 7 or it squeezes back through 8.15, and I'm out of the idea. Coming up, we'll kick it back into the live news flow.
Thanks, Stock Whisperer. All right, news brief. First up is Intercure. ProTerminal's newsroom is tracking Intercure, finalizing a NIS $230 million settlement, about $77 million, tied to war-related indirect damages. That money is earmarked for accelerating the rehab of the Near Oz facility and supporting expansion in the German medical cannabis market. Why it matters? On a morning where SPY is around 763.5 and red, this is the kind of company-specific cash and capacity headline that can overpower the index tape. The markets desk already hit the chart. Here at the macro desk, the clean read is simple. Settlement proceeds aren't recurring revenue, but they can change the runway. The investor angle on Intercure is execution, not a victory lap. If the facility rehab actually restores production capacity, that can matter for supply, margins, and how quickly the company can lean into Germany. If it drags, then the settlement is just a big headline with a hard hat on it. Medical cannabis is already a noisy corner of the tape, so I'd keep this framed as operational relief first, market excitement second. Next headline. Apple is cutting its standard EU App Store commission from 30% to 26%, starting October 1st. The move follows a €500 million fine from the European Commission in 2025. So this is very much a regulatory-driven change, not Apple waking up and deciding margins were too fun. Why it matters? App Store economics sit inside that high-margin services machine investors care about. A 4-point cut is not an earthquake by itself, but it's another reminder that platform fees are now a political and regulatory target, not just a business model. The macro read on Apple is pretty straightforward. When QQQ is sitting near 705.9, down just over 1%, anything that pokes at mega-cap tech margins gets a little more attention. I'm not saying this headline alone drives Apple's tape. It probably doesn't. But it adds to the broader services regulation overhang. Regulators rarely ring a bell at the top. They just send invoices. Dry, but effective. So that's the brief. Intercure gets a cash and capacity catalyst. Apple gives up a slice of EU App Store economics. And the broader tape is still selective, with VIX around 18.9. Not panicking. Coming up, we kick it back into the market mover scan and see which of these headlines is actually getting paid on the tape.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board, and this board is not subtle. DAIC sitting top again, 175, up 310%, but here's the weird part. Relative volume is only 0.93, so the percent move is gigantic, but it's not the same volume quality as XPON. XPON 740 up 115. 35 times relative volume. That's real tape interest. And yeah, it matters because QQQ's down 1.2. Names green and a red tech tape get my attention. SDOT's still third slot, just under 25, up 89, 15 times relative volume. Then flip side, FLZH is a straight damage check, 29 cents down almost 70%. BTCT is the volume freak, 462 times relative volume. So we're not doing a sleepy board read. We're going 1-minute chart, name by name, and we're starting with DAIC because top of board is still the scoreboard. Okay, DAIC on the 1 minute. Price on the board is 175, up 310%. Oof, look at the context. Financial services shell company bucket, roughly 12.7 million market cap, high dilution risk. That doesn't mean the candle has to fail this second, but it does mean I'm not treating the headline green like clean institutional demand. For the tape, previous markers were 125 and 130 for defense, and price has lifted well above those. Now the question is whether 175 becomes acceptance or a rejection print. Watch 175 above. If buyers keep printing above that, momentum is still pressing. Below 150, I start thinking air pocket back toward that earlier 130 zone. Thin shell names can go vertical and then disappear. So here at the markets desk, I'm keeping it brutally simple. Above 175, buyers have the wheel. Lose 150, that chart changes personality fast. Now, XPON. This is the one I want back on screen, because this is still the cleaner volume story versus DAIC. We're at about 740 on the board, up 115%, and the monster stat is still 35 times relative volume. That's not a sleepy gap, right? That's real tape participation. For the live paper trade levels we talked through earlier, I'm not going to rehash the whole bracket. The two zones are simple. 815 is the squeeze risk line above, and $7 is the continuation risk line below. If this thing can't get back through that 815 area, the long side momentum cools off fast. But if 7 starts cracking on volume, then you're no longer talking about a cute pullback. That's where the lower high crowd starts leaning on it. For now, the question is whether this 35 times volume is still supporting higher lows, or if it's turning into churn. Flip me over to S-Dot because this one's a totally different personality. SDOT's sitting just under 25, up about 89%, and that $25 area is the whole intraday conversation right now. If it reclaims 25 and actually holds it, not just a wick, not just one candle, then the tape's telling you buyers are still willing to pay up after the agricultural supply chain move. But if 25 keeps acting like a lid, then the prior $21 zone matters a lot because that's the pivot from the earlier move. I don't love ignoring the risk here either. High dilution risk on the board, about 15 times relative volume, and this is a name that's already done a huge percentage move. So yeah, impressive strength. But if it starts failing back through the reclaim area, you have to respect how quickly these small cap gap moves can unwind. Now hit BTCT for me, because this one is just ridiculous on the relative volume line. Stock's around 147, up about 29%, but the headline is 56 million shares traded against an average around 122,000. That's 461 times relative volume. So yeah, the tape is awake, but this is also a Bitcoin mining proxy, so it can absolutely whip around with crypto sentiment. Crypto's volatile, unregulated, and these sympathy names can go from clean momentum to rug pull candles real fast. What I want to see on this 1 minute is simple. Are the pullbacks getting bought with volume staying firm, or is it just one exhaustion blast and then lower highs? Around $1.50 is the obvious battle zone on the screen. If it keeps rejecting there, that's tired. If it can actually build above it, then at least the buyers are still showing up instead of just chasing the first candle. Okay, quick under a buck check. Lucy first, then LGHL. And these are both microcap tapes, so don't treat them like clean large cap breakouts. Lucy's trading right around 98 cents, up 43%, with nearly 79 million shares and 23 times relative volume. The whole story here is the dollar line. Under it, you can get trapped and chop. Over it, you want to see the stock actually accept that level and not instantly snap back under. Now flip to LGHL, totally different risk profile. 76 cents, up 25%, about 25 million shares traded, 94 times relative volume, and the float listed is tiny, about 161,000 shares. That's exactly the kind of name that can look amazing for 2 minutes and then air pocket the other way. So I'm not hyping it. I'm watching whether it can hold the mid-70s area and whether volume is still real after the first chase wave.
All right, quick pro terminal pit stop while the opening tape is still firing. This board right here, this is the same market movers board we're driving the show from. Gainers, losers, price, percent move, relative volume, float, market cap when it's there. QQQ's down 1.5% and little names are still flying. So here at the markets desk, I don't want vibes, I want the board. BTCT jumps out because that relative volume read is massive. Research first, not a green button signal. Now I hit the 1 minute terminal chart. Same name, BTCT, about $1.52 on the board, up 33%. And the relative volume print is the reason it even gets our attention. This is where you line up the candles, the volume, the wicks, the actual tape. Did volume confirm the push? Are sellers stuffing every pop? Are dips getting bought? Or is it just air? That's the workflow. Board lights it up, chart tells you if there's structure or if it's just noise. Then, and this is huge with fast small cap movers, before anybody gets married to a chart, I go straight to the profile and check filings. Offerings, shelves, ATM language, reverse splits, registration statements. That's where the risk can be hiding. ProTerminal puts the SEC docs right inside the ticker profile, so you're not trading off a random headline in chat. And then I flip insider trades too. If there's buying, selling, or just nothing recent, you want that context. Not every profile is perfect, and some data can be delayed or unavailable, but this keeps the process tight. Chart, catalyst, filings, insiders.
Thanks, Markets Desk. Breaking macro wire first. ProTerminal's newsroom is tracking this headline right now. Bond market anxiety raises the stakes for Fed Chair Kevin Warsh's Jackson Hole debut. What happened is pretty simple. Treasury market nerves are back in the driver's seat, and investors are trying to figure out whether Warsh uses Jackson Hole to give any policy signal. What we know? Higher yield anxiety can tighten financial conditions, lift borrowing costs, and pressure equity multiples. What we don't know yet: no speech text, no official policy signal, no clean read on the Fed path. Market read right now. QQQ is sitting around 703.5, down 1.39%. SPY around 762.9, down 0.36%, while TLT is actually up about 0.5%, near 82.50. So this is not a one-way bond panic on the screen. It's a nervous market waiting for the adult in the room to say something, ideally using full sentences. Next headline. U.S. equity futures extended losses as markets brace for Jackson Hole and upcoming NVIDIA earnings. That pre-market caution has carried into the live tape. Tech is the weak pocket, with QQQ off 1.39%, while the VIX is only around 18.96, barely green. Why it matters? This is the two-headed risk setup. One head is rates, the other is AI leadership. NVIDIA has become the market's unofficial earnings thermostat. Not a recommendation, just reality. And when that name is in focus while Fed messaging is in focus, traders tend to pay up for patience and keep the trigger finger a little less caffeinated. Coming up, Mega Cap Watch should be a good one for this exact reason. And then Alibaba. Shares are plunging after a discounted $10.2 billion AI-focused placement, with Michael Burry exiting alongside the headline. The facts here are the part the market cares about. Big capital raise, discounted pricing, AI spending plan, and dilution concerns landing all at once. Why it matters: investors love AI until the invoice shows up. For Baba, this is less about the buzzword and more about confidence in how that capital gets deployed. Plus what it says about China tech sentiment more broadly. So the macro desk reads this as a funding cost story wearing an AI jacket. Fashionable maybe, but still expensive.
Thanks. Macro Desk. Markets Desk is going straight to the movers board. All right, look at this tape. QQQ still down about 1.5%. SPY, red. VIX, basically flat. So these small cap moves are not getting dragged higher by the indexes. DAIC is still the monster on the board, up just over 400% at 215. XPON is still live too, up about 150%. And yep, that 815 level from the Whisperer got tagged, so that squeeze got real. SDOT holding third, up 85% around 24 and change. Then the other side of the board matters. FLZH down 70%, DFNS down 42%. So it's not just green confetti out here. This is a very split tape. We're going board to chart, one by one. No guessing. First chart is DAIC. This is the scoreboard leader, but here's the Markets Desk rule on a 400% name. I don't care how loud the percent gain is. I care where it starts accepting now. Current board price is 215, volume about 5.5 million, relative volume just over 2 times average. So the move is huge, but the relative volume number is not in the BTCT type insanity bucket. Different personality. For me, $2 is the first clean line now. Above 2, buyers are still defending the breakout area. Below 2, the tone changes fast. And if it starts building above 225, that's where you can get another momentum check from the tape. Not a recommendation, obviously. This is a tiny, high-risk mover, but the chart is telling you exactly where the fight is. XPON. Now, this is the one we flagged for that 815 hit, and yep, it got there. Now the whole question is, does this squeeze actually accept above 850, or was that just the pop and fade? Board has it around 857, up about 150%. 37 million shares, 37 times relative volume, so the crowd is absolutely here. But on these, I'm not chasing the green candle. I'm watching where it fails. Above 850, if it can keep building higher lows, that's still squeeze behavior. Lose 850, and especially if it starts leaning back toward $8, then the trapped late buyer risk gets real fast. So XPON, 850 is the line in the sand right now. Now, S. Totally different personality. Bigger dollar price, but still a momentum tape. Earlier we had that 25 reclaim marked, and right now the board's showing about 24.45, so it's close, but I'm not giving it credit for acceptance until it's actually holding over 25. That's the difference between a reclaim and just a wick. Volume's legit. 12.7 million shares, about 17.5 times normal, and on a day where QQQ is still heavy, that relative strength matters. But this also has high dilution risk data on the board, so you treat those upside spikes with respect, not worship. For me, the clean read is simple. Above 25 and holding, buyers are still pressing. Back under 24 and especially down toward 21. That downside pivot becomes the tell that the move is starting to unwind. FLZH now, and this is the ugly side of the board. Down 70%, trading at about 28 cents. So this is not the same conversation as the high-of-day squeezers. This is a washout tape. 7.2 million shares is a lot of stock moving, but the read here is super simple. Does any bounce actually come with demand, or is it just shorts covering into a broken chart? With high dilution risk on the profile, I'm not giving this thing the benefit of the doubt. For me, the first line is that 30-cent area. If it can't even reclaim 30 and hold it, it's still just a sub-dollar damage chart. And if it starts losing 25 cents, that's where the bounce attempt can get really thin, really fast. Lucy back on the 1 minute. This is the cleaner fight because everybody can see the same line, $1. It's sitting just under it, around 97 cents, up 42%, and the volume is massive, 88 million shares, about 25 times normal volume. So this isn't quiet. The question is acceptance versus rejection. If it's above $1 and holding there, that changes the character, because now dips into 1 are buyers defending the level. If it pops through and immediately stuffs back under, then that's rejection, and you can see how fast these sub-dollar names reset when the tape realizes the level didn't hold. I'm watching $1 cleanly, not the noise at 98.99. BTCT now, and this is the weird one on the board, because the percent move is solid, up about 38%, but the relative volume is the headline. 483 times normal volume. That is not a normal Tuesday tape, especially with QQQ still down almost 1.5%. So yeah, crypto-linked name, Bitcoin mining angle, but don't let the story get bigger than the chart. The fight we already marked is $1.50. It's at about 157 right now. So above 150 the crowd stays interested. If it starts accepting under 150, that same monster volume can flip from squeeze fuel into exit liquidity really fast. Also, dilution risk on the board is high here, so I'm not treating this like a clean large cap breakout. It's momentum first, risk first, and that 150 line is the whole conversation. Quick, lower board pass before we hand it forward. LGHL first. This thing's up about 33%, trading around 80 cents, and the relative volume is huge at 117 times normal. But here's why I'm slowing everybody down. The float showing on the board is tiny, like 160,000 shares tiny. That can look amazing on the way up and absolutely brutal on the way back down. So for LGHL, 80 cents is the obvious battleground. If it's above it, traders will keep staring at it. If it loses that area, don't be shocked by nasty air pockets. Now, flip to PMI. Totally cleaner profile. Medical device name, about 426, up 33% on a little over 8 million shares. Relative volume is only 4 times, not 400 times, so it's a different kind of move. Less crazy, more traditional gainer tape. I'd keep 425 in focus there, just because that's where it's trading now. Build above it and the chart stays orderly. Lose it and it probably needs time. Alright, That's the movers board hit. Next, we'll get off the raw price action and into what's actually driving the tape. Alright, let's cool the small cap chaos for 1 second and hit a mega cap that actually matters to this QQQ tape. Microsoft. QQQ's down about 1.3, and MSFT is not acting broken. Daily chart first. Price is sitting around 485, still above that 20-day area near 473, but stuck right under the 487 shelf. So, this is not a momentum blow-off chart, this is a base chart. Here's the scoreboard on the daily. MSFT peaked up in that 505 to 510 zone back in April. Then, you got lower highs, a pullback, and now this tight little coil around 485. The range is clean, support near 481.86, resistance basically 487. That's the whole fight. Volume has dried up hard on the recent daily bars, so the tape is telling you nobody has really won this range yet. For the markets desk, 487 is the level above where this base starts to matter. Below 481.86, different personality. Then it's not basing, it's leaking. Now let's drop down to the 1 minute, because this is where the move actually got interesting. Oof, look at that expansion candle. MSFT opened around 483, chopped in that sleepy 482.50 to 483.60 box. Barely any conviction. And then bang, volume spike over 370,000 shares on that push, straight up into the mid 485s. That's real participation. Current read is around 485.17, off the high but still holding the breakout area. Intraday resistance is 486.50. Support is 483. If buyers keep accepting above 486.50, that's strength versus a red QQQ. If it loses 483, that breakout basically unwinds. That's the key here at the markets desk. MSFT is not screaming, but it is holding up better than the index. QQQ red by more than 1%, breadth mixed, and this thing is building near the highs instead of falling apart. I'm not seeing MSFT on today's earnings slate. Calendar has Chicago Fed at 12:30 and BHP, SSL on the earnings side. So right now this looks more like flow and relative strength than a fresh company-specific headline. Coming up, we'll jump back into the movers board.
Thanks, Markets Desk. Okay, quick macro check because this tape is not random. You've got SPY at 763.55, down 0.28%. QQQ at 704.05, down 1.32%. And IWM down 0.55% at 298.33. So the damage is really concentrated in growth and mega-cap tech, not some broad liquidation wave. And look at VIX, 18.88. Actually down a touch, minus 0.37%. That's the market saying, I'm annoyed, not terrified. The bond side is the tell here. TLT is up 0.68% to 82.61. IEF up 0.26% to 93.07. Bond prices catching a bid while Nasdaq gets hit. That's the classic slower growth, lower yield impulse showing up underneath the equity tape. Now, here's the macro chain. The calendar has Chicago Fed national activity with an estimate of 0.1, and the platform is showing negative 0.08. Softer than expected, so growth is not exactly kicking the door down. And when growth looks softer, bonds tend to catch a bid, which is what we're seeing in TLT and IEF. But the dollar is still a little firmer. UUP at 27.95, up 0.18%. While the yen proxy is slightly lower at 57.66. So it's not a clean rates down, risk up morning. It's more like the market is wearing 3 jackets because it doesn't trust the weather app. Gold is up 0.96% to 427.44 even with the dollar firmer, so there's still a defensive bid. Oil is the opposite side. USO down 1.48% to 132.65 after the Hormuz headline eased supply concern. Less oil panic premium means a little less inflation pressure, and that feeds right back into bonds.
Thanks, Macro Desk. We're going to slow it down at the stock whispers and check the simulated paper book. No hero trades here. This is the broadcast paper portfolio. 100K sim account. And today the decision is simple. Thesis, level, defined risk, or we don't touch it. Okay, here's the book. 4 open positions on the screen: short BABA, short TLT, long XLRE, long XOM. Open P&L is roughly down $115 right now, and most of that is one position. XOM. The tape matters here. QQQ is down about 1.4%, SPY is only off about 1/3%, Bread is mixed, and VIX isn't really exploding. So even though mega cap tech is heavy, I don't want to blindly chase downside. If the level breaks, we act. If it doesn't, the best trade is often no trade. Start with BABA. We're short 75 shares from 117.48. Current mark 117.65. So it's basically flat to slightly red, down $12 and change. The thesis is still the same: discounted AI placement, supply overhang, and a weaker QQQ tape, giving the short some context. But here's the key: BABA has not confirmed below 116. That's the continuation level. If it loses 116 cleanly, then the short thesis has more evidence. If it pushes back above 119.25, that's my squeeze warning. And the bracket stop sits higher at 121.20. So I'm not adding in the middle. Middle is where traders get chopped up. Next pair on the board: TLT and XLRE. TLT short is 100 shares from 82.46, marked 82.60 right now, so that one's against us by about $15. XLRE is long 200 shares from 44.95, marked 45.10, green about $30. So together that little rates and real estate sleeve is doing what I want it to do. It's not making me rich, it's not blowing me up. It's sitting inside to find risk while the bond tape stays jumpy. I don't need to force an adjustment just because one leg is red and one leg is green. Now XOM, this is the one I have to grade honestly. Long 60 shares from 165.89, current mark 163.95, down about 116 on the position, a little over 1%. That's the drag in the book. And this is exactly why the bracket matters. I'm not sitting here saying, oh, it has to come back. No. The thesis either stabilizes or the predefined risk takes me out. I don't average into weakness just because the P&L is red. Red is information. You listen to it. Let's check the watch levels, because this is where the next decision would come from. NVDA below 208 is the big one for tech downside continuation, but only if QQQ stays heavy. I'm not shorting NVDA just because the market feels ugly. I need the level. On BABA, 116 below is the continuation trigger for the existing short, and 119.25 above is the squeeze warning. That's the whole framework today. No fresh trade while BABA sits in the range, no NVDA trade while it hasn't broken 208, and no extra risk just because the board is flashing red. So, the stock whisperer is standing down right here. 4 positions open. Brackets doing their job, no planned order going in. If one of these levels triggers, we'll come back and execute it on screen. Coming up, we'll kick it back to the movers board and see where the live momentum is actually staying clean.
Thanks, Stock Whisperer. Markets Desk is grabbing the movers board right now. All right, look at this board. QQQ's down 1.36%, SPY's red, IWM's red, VIX is just sitting under 19. So this is not broad risk on. This is pure pockets of action tape. DAIC is still the loudest thing on the screen. 223, up 423%, about 6.4 million shares. Then XPON, still up 112, but already backed off that earlier squeeze zone. SDOT at 2760, up 109, and that one actually matters because we had the 25 reclaim hit on the board a minute ago. BTCT is wild. 216, up 89, and the relative volume is just stupid, 563 times normal. Oof, that's not normal interest. That's event-style flow. We're going chart by chart now. Fast. DAIC first. 1 minute chart, top name, and this is the definition of a scoreboard stock. 400+% on the day, but the relative volume is only 2.4 times average. So yeah, big move, but not the same volume shock as BTCT or XPON. That matters. Price is sitting around 223 with a 12.7 million market cap, roughly 14.9 million float, and the board has high dilution risk on it. So for the markets desk, I'm not staring at the percentage gain. I'm staring at whether the tape can actually hold structure. Watch 220 below. If DAIC loses that and can't snap back, the chase crowd is probably getting tired. Above 240 is the cleaner prove it area, not a prediction, just the next spot where buyers would need to show they're still in control. This is a shell company category name too, so the wicks can be nasty. Quick hands only on the read here. XPON next, battery name, Xpion 360, and this one is still up 100+%, but the characters changed a little bit. 41 million shares traded, about 40 times relative volume, so yeah, the attention is real. But look at the 1 minute now. Earlier momentum was the easy part, that push got crowded, and now the tape's leaking back toward the low 7 area. For me, that $7 zone is the line on this chart. If it keeps accepting below 7, that's not consolidation anymore, that's the fade taking control. If it can reclaim and actually hold back above the low 7s, then you can start talking about a reset. But right now, with QQQ still heavy, this is not a chase spot. It's a volume runner trying not to lose VWAP-style support after the first rush cooled off. Now SDOT, and this is the one where that 25 reclaim mattered. We flagged that 25 area earlier. It hit, and the stock did exactly what momentum traders wanted first. Reclaim, squeeze, extend. Current prints around 2760, still up about 109%, 16.5 million shares, 22 times relative volume. But here's the real test now, 27 to 28. If those candles are holding bodies in that zone, that's constructive. If every push into 28 is just leaving upper wicks, then you've got supply showing up, and the move gets a lot more slippery. High dilution risk on the board too, so I'm not treating this like some clean institution quality breakout. It's a small cap momentum tape. Great liquidity today, massive range, but the difference between holding 27 and wicking 28 is basically the whole story right now.
Thanks, Markets Desk. Breaking news across ProTerminal right now. Stocks are sliding as an oil rally tied to renewed Middle East tensions sparks investor anxiety. Here's what we know. The desk is tracking higher energy risk premium, and equities are reacting cautiously because sticky crude is basically a tax on margins. What we do not know yet, whether supply is actually impaired, whether this premium sticks, or whether it fades as the morning develops. On the live tape, SPY is around 762.8, down 0.4. QQQ is near 703.3, already under that 704 pressure line we flagged earlier, and VIX is still just under 19. So yes, the tape is heavy, but vol is not screaming. Classic macro, the fire alarm is chirping, not yet the sprinklers. Oil is around 132.76 after tagging that 132.65 downside level. So here at the macro desk, the clean reset line is crude rebuilding above 133. Next headline. Gold surges past 4,400 as investors look for stability. This is the other side of the oil story. When energy risk rises and equities wobble, money starts hunting for assets that don't need a perfect growth story to work. Gold is getting that bid, and our GLD proxy is around 427.94, up just over 1%. Bonds are also firmer. TLT is sitting around 82.60, up about 0.7, while the dollar is slightly higher. That combination matters. Gold is rising even with a firm dollar, so the bid looks more like fear and inflation insurance than just an FX move. Gold is not a personality test, thank goodness, but it is a pretty useful anxiety meter. Third headline. NASDAQ 100 nears correction amid chip sell-off. ProTerminal's newsroom is tracking semiconductor weakness dragging the tech-heavy tape, with NVIDIA and AMD at the center of that pressure. The market read is pretty straightforward. If chips are no longer carrying the index, then oil headlines and rate jitters don't have to do much extra work. QQQ near 703, down about 1.4%, is the level that tells the story better than any slogan. VIX near 19 says this is not full panic, but leadership damage is real when the NASDAQ is flirting with correction territory. That's the macro problem today. The growth engine is coughing while the oil gauge is blinking. Coming up, the markets desk gets another crack at the movers board, and we'll see what's actually catching a bid under the surface.
Thanks, Macro Desk. Markets Desk is jumping straight into AMCI because this is exactly the kind of small cap tape that can fool people fast. Pull up the 1 minute. Oof, look at that wick. Stock opened around 494, chopped under 5, then launched all the way to 640 on a volume burst. That was the fun part. The nasty part? It gave almost the whole thing back, slammed down toward 453, and now we're sitting back near 486. That's not clean strength. That's a parabolic pop, then a rug pull structure. Here's the read. AMCI's float is only about 3.66 million shares, so yeah, it can move. Tiny supply, thin liquidity, one aggressive buyer or one seller can shove the chart around. But this is not a clean breakout anymore. The first key is 4.86. That's where the latest candles are trying to hold. If AMCI loses 4.86 and can't snap back, that tells me the post-spike base is cracking. Other side, 5.30 is the prove it reclaim, not 5.05, not a tiny green candle. 5.30, that's where the range starts to look a little less broken. Until then, it's chop under resistance after a failed squeeze. And with QQQ down more than 1% today, small cap AI adjacent stuff does not get the benefit of the doubt when the volume disappears.
Catalyst, check now, because on these names, the headline matters. AMC Robotics had a press release on August 21st, warrant inducement transaction, up to $2.1 million in gross proceeds. So that helps explain why traders are watching the name, but it also changes the tone. Warrant inducements are not the same as some clean product sales catalyst. It's financing. It can bring cash in, but it can also create overhead supply. And now flip to dilution. This is why the markets desk stays careful on these. ProTerminal shows active shelves, an active equity line, about 40 million raised over the last 12 months, and an overall dilution risk marked medium. So if you're watching AMCI, the chart is only half the story. The other half is, can the tape absorb supply? Or was that 640 candle just a liquidity event? Back to the tape. This is the scoreboard for AMCI. 4.86 below, 5.30 above, and that 6.40 wick is the ceiling from the failed blast-off. If it's living under 530, I'm treating bounces as suspect. If it reclaims 530 with real volume, then at least buyers are back in the fight. But right now, low volume, choppy candles, big intraday damage. That's trap territory. Low float small caps can halt, reverse, dilute, and just move violently for no clean reason. So we're reading levels here, not chasing the story. Coming up, we'll keep rotating the movers board because this tape is still throwing out wild names. All right, let's hit the movers board. Markets desk is going straight to what's actually moving. QQQ is still heavy, down about 1.3. SPY is only off a third, so if a small cap is green right now, it better have real volume behind it. Top of the board, DAIC is still absurd, up about 300%, but it has slipped hard from the earlier fight zone. SDOT, oof, still up 117% at 28.62, and that one's got 25 times relative volume. XPON is up 94, 43 times relative volume, but we already saw that $7 level give way, so that's no longer clean momentum. BTCT is still the volume monster, 94% green, 84 million shares, 690 times relative volume. That's crazy tape. Then Lucy sneaking in, up 47% with 109 million shares. So yeah, this board is not quiet. Let's start with DAIC on the 1 minute, because this is where the scoreboard matters. Earlier, that 220 area broke, clean hit to the downside, and now we're down at 173. So the easy part of the move is gone. This is now damage control for longs, not a fresh clean breakout look. Watch 170. If that starts failing, the tape can get slippery fast because everybody who chased the 300% headline is suddenly underwater on the late entry. On the other side, $2 is the first real reclaim line for me. Not 240, not the hero level, just 2. Can it get back above a round number and hold bid? If not, DAIC stays in fade mode even though the board still shows a massive green number. Now, SDOT. This is the one I want on the screen because that 28 area is still the fight. Stock's at about 28.62, up 117%. And it's doing that classic small cap thing where every wick around 27 to 28 matters. Remember, we already flagged that wick zone, 27 underneath, 28 above. So the update is pretty simple. As long as buyers keep accepting above 28, this is still showing real bid for a tape where QQQ is down more than 1%.
If it starts losing 28 and then 27 gets tested, that's where the move can get a lot sloppier fast. Volume is not fake here either. 18.2 million shares, 25 times relative volume, but dilution risk is marked high. So I'm not treating this like some clean institution-style breakout. It's a momentum chart, and the level is the story. XPON next, and this one is messier. You've got a monster volume number, 43.7 million shares, 43 times relative volume, but price is now $6.67 after that $7 break failed. That's the part I care about. 7 was the shelf, it lost it, and now the question is whether buyers can actually reclaim it, or if this just keeps bleeding lower, while everyone who chased the breakout gets stuck. Still up 94% on the day, so I don't want to act like the move is dead, but the character changed when 7 turned from support into resistance. For me, 7 is the line on this chart now. Back above it, okay, buyers are trying to repair it. Below it, this is still a fade check on a huge relative volume runner. BTCT now. Yeah, this is the ridiculous relative volume print on the board. 84 million shares, 690 times normal volume, and it's sitting around 221, up almost 94%. So the headline is obvious. Crypto-linked name, Bitcoin mining angle, and the tape is giving it a massive extension, while QQQ is still heavy. But the level that matters for me is $2. If this thing keeps accepting above 2, it's still got that momentum bid feel. If 2 starts cracking, that's where these liquidity pockets can get nasty, because after a 690-time volume day, the exits can get crowded fast. High dilution risk showing here too, so I don't love pretending this is clean. It's a momentum chart. Full stop. Lisi next, and this is the clean psychological pivot name. Stock's basically right on a buck, $1.05, up about 47%, and the volume is wild. 109 million shares already, 32 times relative volume. Smart eyewear, voice assistant, ChatGPT style product angle. That's the story people are going to attach to it. But the chart has to prove it around $1. Above a buck, buyers are defending the line, and you can see why momentum traders care. Under a buck, it gets way more churny, because now every push is fighting that round number gravity. So I'm watching whether one holds as support or if this turns into a VWAP fade with huge volume but no progress. Now let's flip the board to the ugly side. FLZH. And yeah, this is why the red names matter too. This is a quarter stock now, 24.9 cents, down about 74%. And the chart read is not, oh wow, it's cheap, it has to bounce. No, the read is, where does selling actually stop? If that 25-cent shelf keeps failing, the downside levels matter way more than any bounce headline. You've got 8.7 million shares traded, high dilution risk on the board, and this is a tape where every little pop can just be supply coming back in. So I'm watching 25 cents as the line right here. Above it, maybe it stabilizes for a minute. Below it, you're talking thin air toward the low 20s. Totally different personality than DAIC or SDOT. This is not momentum strength. This is crash tape damage control. Last pass here, RITR, and this one's wild because the price is sitting just over a dime, about 10.7 cents, but the volume is enormous. 270 million shares, 469 times normal volume. That's the whole story. It's not a clean higher-priced mover. It's a dime area liquidity storm. If 10 cents cracks, that changes the tone fast, because now you're flirting with sub-dime territory, and those names can get nasty in a hurry. Then, quick compare. PMI is the cleaner-looking lower board gainer to me from a structure standpoint. 447, up 39%, almost 10 million shares, 5 times relative volume. CYPH is also green, up 38%, near 196, but the relative volume is only 0.61 versus its own baseline, so the follow-through isn't the same kind of everybody just found it tape. So board takeaway, DAIC and SDOT were the headline power names, BTCT and RITR are the insane volume prints, FLZH is the red side warning label, and PMI is probably the cleaner secondary watch versus CYPH. Alright, that's the movers board. We're going to keep those levels on the scoreboard and flip into the next live read.
Thanks, Markets Desk. All right, quick news brief from the macro desk, and the lead story is AI valuations coming under scrutiny. ProTerminal's newsroom is tracking a fresh round of caution around AI-focused companies where the market is asking, Okay, where's the real revenue and where's the venture capital confetti cannon? That matters because QQQ is already down about 1.4%, around 703.7. So when the growth tape is soft, anything priced on future magic gets a much shorter leash. The affected bucket here is broad. Speculative AI names, mega-cap AI beneficiaries, and even some of the small-cap movers that are borrowing the AI label for momentum. Next up, the AI-linked rally faded, even with Amazon's strength. The headline is pretty simple. One big leader can still get a bid, but the group is not moving like one clean risk-on basket this morning. We're tracking Amazon as the standout, but the broader AI enthusiasm is cooling, and that's the part investors care about. When a leader rallies and the theme still rolls over, that usually means the market is getting picky. Less AI everywhere, more show me the cash flow. Boring? Sure. Also how stocks eventually get valued when the espresso wears off. Third story. S&P Global is lower after a weak profit print. The company missed profit estimates, and the market is treating that as another reminder that earnings season still has teeth. Why does that matter beyond one stock? Because SPGI sits in that data, ratings, benchmarks ecosystem, a pretty clean read on corporate activity and financial market plumbing. In a tape where SPY is only off about 1/3%, but NASDAQ is taking the bigger hit, misses like this keep investors focused on margins, not just revenue stories. Now Ford. And yeah, this one has everyone doing the double take. Ford shares are tracking a 44% surge tied to AI excitement, which is not the sentence people expected over their Monday coffee. The macro desk read is, this shows how far the AI narrative has spilled outside pure software and semis into old economy names. But the market's next question is going to be proof. Is this factory efficiency, autonomous systems, pricing power, software revenue, or just a shiny sticker on the hood? Big move, big expectations attached. Last one in the brief. Visa plans to cut 7% of its workforce as part of a restructuring push. That's a cost control story first. Management trying to protect margins while the payment space stays competitive. Investors tend to weigh these two ways. Efficiency can support earnings, but layoffs can also hint that growth is getting harder to squeeze out. With bonds bid today, TLT up about 0.6%. The market is already leaning a little defensive. Coming up, we'll kick it back toward the movers board and see which single names are actually fighting this tape.
Thanks, Macro Desk. Markets Desk is going right back to the movers board. All right, look at the split here. QQQ is down 1.3, SPY only off about 0.4. VIX basically flat, and the small cap board is still doing its own wild thing. DAIC is still parked at the top, up about 259% at $1.53. BTCT, oof, still monster volume, 124%, 783 times relative volume. SDOT is hanging right around 27 after that nasty level fight we had earlier. XPON is still green, but under 7 now, so that one's not clean. Red side, FLZH is still the crash tape, down 73%. Lucy is basically sitting on the dollar magnet. That's the board. Now we're going chart by chart. Pull up DAIC first, because this is still the headline gainer, but it does not look like a clean strength chart anymore. This is CID Holdco, Financial Services Shell Company category. Price around 153. Volume just under 10 million. Relative volume 3.6 times. So yeah, the percent move is huge, but relative volume is not the crazy part versus some of the other names. The tape is the story. We had that 220 breakdown hit earlier, and now the board has it living under 170. That's weak. For me, 170 is the first reclaim line if bulls want to stop the bleeding. Under 150, that's the next downside tell. Not a prediction, just the spot where liquidity can get thin fast. And don't ignore the structure. 14.9 million float. High dilution risk on the data. Tiny market cap around 51 mil. So this can move, but it can also rug pull. Watch the candles, not the headline percent gain. BTCT next, and yeah, this is the wild one on the board. BTC Digital, crypto-linked name, up about 124%. But the number that jumps off the page is 783 times relative volume. That is not normal tape. Almost 96 million shares already, versus an average around 120,000. So the question is super simple. Is 250 actually support, or is 250 just where late buyers are getting distributed into? Right now, if this is staying above 250 and building higher lows, okay, the bid is still defending. But if it starts accepting under 250, that can turn into a very fast fade, because this is a small cap crypto runner, high dilution risk flag, and these can move both ways in seconds. I'm not chasing that green candle blindly. I'm watching whether 250 holds on pullbacks and whether volume expands on the push instead of only showing up on the flush.
Thanks, Markets Desk. Breaking right now. ProTerminal's newsroom is tracking this. Trump has paused the 50% tariffs on Canadian imports for 3 days. What we know, the U.S. has temporarily halted those tariffs after a new trade deal with Canada. What we don't know yet is the important part, whether this gets extended, becomes permanent, or snaps back after the 3-day window. For markets, that matters because tariffs are basically a cost pressure tax running through manufacturing, retail, autos, anything with Canadian input exposure. The tape is treating it like relief, but not champagne relief. SPY is still around 763.5, down 0.3%. QQQ is heavier at 705.1, down 1.17%. And VIX is basically calm at 18.92. So yeah, the macro desk read is fire alarm quieter, building not fully cleared. Next big one. The Treasury is doubling its long-dated bond buyback operations. That's the headline, and the market reaction is pretty clean. Long-end yield pressure eased, and bond ETFs are catching a bid. TLT is up about 0.6%, around 82.54. IEF is up 0.21%, near 93.02. Why it matters? When the long end chills out, borrowing cost pressure eases a bit, and the valuation math for longer duration equities gets slightly less angry. That's the polite version. The impolite version is the bond market was yelling, and Treasury just turned the volume knob down a notch. Still, dollars firm around 27.95, so this is not some pure everything risk-on party. And the broader equity story, ProTerminal is tracking the Wall Street relief rally tied to lower yields and a cooler tech slump. That's the mechanism. Yields back off, growth stocks get some oxygen. But live, that oxygen is uneven. SPY is down 0.3%. IWM is down 0.33%. And QQQ is still the problem child, off more than 1% at 705.1. Breadth is mixed, not screaming risk on. So the headline is relief for rates. The live read is selectivity. Coming up, the Markets Desk has the movers board again. And that's where we'll see if this macro relief is actually showing up stock by stock.
Thanks, Macro Desk. Quick check-in at the Stock Whisperer paperbook. This is the show's simulated portfolio, not something to copy, and right now the book is mixed. BABA is still the short from earlier. Short 75 shares from 117.48. Current mark around 117.98. So we're down about $38, roughly 0.4%. Thesis hasn't really broken, but it also hasn't paid us yet. Discounted placement headline, weak QQQ tape, but price is still hanging inside the box. TLT is another small red mark, short 100 from 82.46, trading 82.58, down about $12. On the green side, XLRE is the cleanest position in the book. Long 200 from 44.95, trading 45.28, up about $66. Call it 0.7%. That one is doing what it was supposed to do. Defensive real estate catching a bid, while the Nasdaq is heavier. XOM is the opposite read. Long 60 from 165.90, now 164.45, down about $87. The macro desk just talked through the oil risk tape being whippy, and that's exactly what this feels like in the position. The catalyst is there, but the stock is not confirming cleanly yet. Cash sits just over 70,400 in the paper account, so we're not stretched. The important part for me is simple. Every name has a bracket, and if the stop gets hit, the trade is wrong. No debating it live, no moving the goalposts. Here are the working orders. Baba Short has the take profit buy down at 110.80, stop buy at 121.20. TLT Short is covered by a 79.85 profit order and an 83.65 stop. XOM Long has the upside sell at 172.40, stop at 162.60. XLRE Long has the sell limit at 47.20, stop at 43.90, so the risk is already defined. On the watch side, I'm still not chasing BTCT after that monster relative volume move. For the paper desk, BTCT only gets interesting above 272 if it bases and reclaims with volume. Below 235, that's a failed breakout warning. And NVDA below 208 stays the clean tech pressure trigger if QQQ keeps leaning lower. Coming up, we'll hand it back to the mover scan because that board is still throwing off some wild intraday signals.
Thanks, Stock Whisperer. Alright, Markets Desk is back on the movers board. And look at this board versus the tape. QQQ's down a full %. SPY's red, IWM's red, VIX basically flat near 19. But the small cap circus is still throwing fireworks. DAIC's still top slot, up about 240% at $1.45. BTCT, monster volume, 109 million shares, almost 900 times relative volume. SDOT, still doubled. XPON still up 90 plus, but that one's been messy. So the game right now is simple. Don't marry the % gain. Follow the reclaim levels, follow VWAP, follow where the volume actually defends. First chart is DAIC, because oof, that 150 downside tell we flagged is now very much in play. DAIC on the 1 minute now. This is CID Holdco, Shell Company Bucket, Financial Services label, high dilution risk on the platform. So right away, this is a trade the tape name, not some clean fundamental story. Price is around 1.45, still up roughly 240%, but the tone changed. Earlier 170 was the reclaim line, then 150 became the downside tell. Now we're under it. That's not strength. That's sellers controlling the lower high structure, unless buyers can snap it back above 150 and actually hold it. Volume is real, 11.8 million shares, about 4.4 times relative volume. But compare that to BTCT in the next slot, and you can see DAIC is not the craziest liquidity story on the board anymore. For me, watch 150 above as the first reclaim. Under 140, this gets uglier fast, because then the whole late morning bounce attempt starts looking like bag holder chop. Fast name, wide spreads possible. Don't chase the headline %. BTCT next. And this is the one where the volume number is just cartoonish. 109 million shares, almost 894 times relative volume. Market soft, QQQ still red, and this thing's up 130%. So yeah, relative strength is real here. But don't confuse that with clean. Crypto-linked small cap, high dilution risk on the platform, and it can whip around like crazy. The line I care about on this one is 250. As long as buyers keep defending that area, it can keep trying to rotate back toward the high of day zone. If 250 starts failing and it can't reclaim quickly, that's where the chase can turn into bag handoff really fast. Now SDOT, totally different personality. It doubled, 20 million shares traded, 29 times relative volume. But the tape after that earlier 27 break is sloppier. This is where I don't want to just see a headline percentage and assume it's still clean momentum. It's sitting around 26.5. So 26 to 27 is the battleground. If it keeps building higher lows under 27, fine. That's base building. But if every push into 27 gets stuffed and the candles start leaning heavy back through 26, that's supply showing up, not consolidation. Big difference. Same small cap rules too. High dilution risk flagged, so the level matters more than the story. XPON now, and I don't want to redo the whole breakdown, but this is the update that matters. It's up about 94%, 45 million shares traded, 45 times relative volume, and the stock is sitting right in that little battlefield we were talking about. 650 underneath, $7 above. So if you're just reading the 1 minute tape, it's not complicated. Above 650, the bulls can keep trying to build a base, but every push that can't reclaim 7 is still getting treated like supply. That's the battle. 650 hold, 7 reclaim. In a tape where QQQ is still heavy, that's the difference between actual momentum and just another pot that bleeds back into VWAP. Now, flip the board red for a second. FLZH first. This is ugly. Down 74%, trading around 25 cents, 9.1 million shares through it, and high dilution risk on the platform. That's not just some sleepy little fade. When you see that much volume on a $0.25 name and the chart is straight air pocketing, that's real sell pressure hitting the tape. Different from a low volume drift, this is people actually transacting lower. Now, DFNS is the contrast. Also red, down about 45%, but look at the volume profile. Only 662,000 shares, relative volume 0.04. So yeah, the percentage move looks brutal, but that's a way thinner move on the board. I'm separating those two completely. FLZH is crash with volume, DFNS is more like a thin markdown, unless volume wakes back up. Alright, speed round to finish this board. PMI first, and this is the cleaner follow-through name in the healthcare pocket. Up about 54%, 10.4 million shares, 5.4 times relative volume, and it's sitting right under that $5 area. So compared with some of the wild stuff at the top of the board, this tape is a little more orderly. Now flip to Lucy. Totally different vibe. Bigger raw volume, 114 million shares, 33 times relative volume, but it's still fighting that $1 magnet. Under $1, every pop into that level gets watched hard, and if it can't live above 1, you can see how quickly that turns from momentum to churn. Now Plag. This is lower board but sneaky active. 86 cents, up 26%, and the relative volume is the whole story. 90 times normal volume, under $1. So same deal. Respect the volume, but don't treat it like a clean blue chip breakout. And then CYPH to wrap the scan, up 34%, price around $1.90, but relative volume is only 0.79, so the follow-through is just lighter versus the others. Big difference between a stock green on the day and a stock with real abnormal demand behind it. Let's reset the movers board here. QQQ is still heavy, small caps mixed, and these runners are trading on their own little island. Coming up, we'll pivot off the board and hit the next live setup.
All right, quick pro terminal pit stop. This is the stuff the markets desk is using live, right here, not some mystery spreadsheet. Movers board first. Look at the tape. QQQ's down about 1%, breadth is mixed, and this board instantly shows you what's actually moving anyway. Gainers, losers, relative volume, price, all in one shot. It's research fuel, not a buy signal. Now watch the workflow. You see a name lighting up. Boom, straight to the 1-minute terminal chart. BTCT's the example here because it's been one of the louder names on the board today. I want the candles, I want the volume bars, I want to see where the bid actually showed up and where the offer smacked it back. That's the difference between staring at a percent gainer list and actually reading the tape. Oof! And on a day where QQQ is heavy, relative strength or fake strength matters even more. And for the small cap stuff especially, this is where I live after the chart. Dilution. Shelves, ATMs, offerings, warrant stuff. That's the fine print that can change the entire risk profile. We just dealt with that earlier on AMCI, so yeah, this matters. The chart can be hot, the volume can be wild, but if the capital structure is messy, you want to know that before you start pretending the move is clean. Then you can jump into a single name profile, filings, insider trades, news, the whole paper trail. That's the point of Pro Terminal. Movers to chart, chart to filings, filings to risk check. Fast, clean, built for people doing their own research while the market's open. If you want the same setup we're using on screen, go to proterminal.io, proterminal.io, and check it out.
Alright, back to the movers board. Markets desk here, and this is where the real chaos is, while QQQ is still down a full percent. Look at this board. DAIC still sitting on top, up 300+%. SDOT holding the high 20s zone. XPON still doubled. BTCT, ridiculous volume, almost a billion% feel to it. 971 times relative volume. And then flip side, FLZH is still the crash tape at 26 cents. So this is not a calm board. This is momentum, supply, and trap risk all at once. First up, DAIC. Pull the 1 minute. This thing is still the headline. 182 on the board, up 327%. 15.1 million shares traded versus about 2.7 million average. So the volume is real enough to matter. But the relative volume is only 5.65 times. Not the crazy 900 times stuff we're seeing in BTCT. That matters. Earlier, the downside break we flagged hit cleanly. So now I'm resetting the scorecard. For DAIC, I want to see whether 180 can actually hold as a base, because below that, this stops looking controlled again. Above $2, different conversation. That's the reclaim that would tell you buyers are actually stepping back in, not just catching a falling knife. Also, high dilution risk on the board, shell company label, small float. So yeah, this can move fast, but it can rug fast too. Now, S-Dot, pull this one up because this is the cleaner high dollar mover on the board. 2687-ish, up 104%, and the volume is legit. 21 million shares versus a normal day under a million. So the question here is simple. Is the high 20s move actually stabilizing, or is every pop still getting sold? I'm watching that 27 area first. If it can keep accepting above 27, then at least the tape is telling you buyers are still hanging around. But if it keeps rejecting there and leaking back toward 26, that's supply showing up, especially with QQQ still heavy today. Also, don't ignore the tag here. High dilution risk, small market cap, and this thing has already doubled. So yeah, great mover, tons of liquidity, but this is not a sleepy large cap chart. This is momentum with teeth. XPON next. Battery name, XPON 360. And this one's doing the classic small cap volume explosion. 687 on the board, basically up 100%. 46 million shares traded, 46 times relative volume. That's the tape saying everybody found it at once. What I care about on the 1 minute is whether that burst turned into a base or whether it's just a staircase lower after the first crowd showed up. $7 is the clean line psychologically. If it keeps knocking and failing under 7, that's churn. If it bases above the mid-6s and volume dries up instead of panic selling, that's a totally different look. Floats around 10.7 million, market cap tiny, dilution risk listed medium. So again, fast name, fast exits. Don't treat this like a normal industrial chart just because it says batteries. BTCT now, and yeah, this is the crypto linked one, so the tape gets weird fast. Pull up the 1 minute. 227 on the board, up about 99%. But the insane part is the volume. 118 million shares traded against average volume of basically 122,000. That's 971 times normal volume. Floats under 9 million, so this has already churned the float over and over and over. That can be real momentum, but it can also become a blender once the bid disappears. For me, the simple line here is the $2 area. If it keeps respecting that, traders stay interested. If it loses that after this much volume, the late chase can get ugly quick. Now flip to FLZH, because this is the other side of the board, not the rocket ship, the crash chart. 25.9 cents, down 73%, and it's already done about 9.4 million shares. This is penny stock liquidity in full stress mode. Different animal than BTCT. On a red side name like this, I'm not trying to hero call the bottom. I'm looking for whether sellers are still in control and whether any bounce can actually hold. The rough line everyone's going to see is 30 cents. Below that, it's still trapped in the mid-20s washout zone. If it reclaims 30 with volume, okay, maybe the tone changes a little, but right now the headline is seller control, high dilution risk, and super jumpy liquidity. Now, PMI first. This is the cleaner healthcare momentum name on the board for me. Picard Medical, sitting right around 496, up about 55%, almost 12 million shares traded, and a little over 6 times relative volume. So it's not DAIC chaos. It's not BTCT insanity. It's more of a follow-through check. $5 is the obvious line here. If PMI can actually live above 5 and not instantly reject, that tells you buyers are still around. If it keeps smacking into 5 and fading, then yeah, that's just round number supply doing its thing. Now flip to Lucy, because this one is a totally different personality. Lucy is basically glued to that $1 fight. 101 on the board, up 48%, but look at the volume. 118 million shares, 34 times relative volume, and only about a 5.8 million float. That's why it churns. Around a buck, every penny matters. Above one, it has the story. Below one, it starts feeling like a trap check real quick. Last speed filter here. DFNS, Ritter, CYPH. Start with DFNS. This is the loser tape. 1130-ish, down 45%, and the relative volume is basically dead versus its normal profile. So I'm not reading this like a clean reversal candidate. Right now, it's a broken chart until it proves it can build higher lows. Now Ritter, totally different beast. 11 cents, up 36%, 289 million shares traded, 500 times relative volume. That is massive penny volume, but it's also high-risk penny tape. 10 cents is the danger line. If that breaks, you're basically back in sub-dime gravity, and these can get nasty fast. Now CYPH to close it out, 193, up 36%, but relative volume under 1, so this is the quality check. Big headline-looking move, but not the same kind of volume confirmation as Ritter or Lucy. $2 is the clean scoreboard level there. Alright, that's the movers reset. Keep DAIC, SDOT, PMI Lucy, and that Ritter 10-cent line on the side screen, and we'll flip into the next chart from here.
Thanks, Markets Desk. Breaking headline right now. U.S. equity futures are lower ahead of Treasury Secretary Bessent's briefing and the upcoming NVIDIA earnings release. Here's what we know. The desk is seeing investors pull risk back before two events that can actually move the whole board. Fiscal policy detail on one side and the biggest AI earnings temperature check on the other. What we do not know yet, we don't have the substance of Bessent's briefing, and we don't have NVIDIA's numbers in this story. So this is not a verdict, it's pre-event positioning. The live cash tape matches that caution pretty cleanly. QQQ is around 706, down just over 1%. SPY around 763 and down about 0.3. VIX at 1889 isn't screaming fire drill, but tech is definitely wearing the backpack full of bricks this morning. Next headline, U.S. bond market anxiety is picking up ahead of Fed Chair Kevin Warsh's Jackson Hole speech. The key fact here is not some magic prediction about rates. We're not doing Fed path cosplay here at the macro desk. It's that fixed income volatility is rising before a major policy speech. Why it matters? When the bond market gets jumpy, equity valuations have to reprice around it, especially long-duration growth. TLT is around 82.60, up roughly 0.2%. IEF near 93.04, and the dollar is a touch firmer around 27.94. Gold is also bid. GLD around 428.56, up 1.2%. That's the classic market saying, I don't know what's coming, but I'd like a helmet, please. And one more big equity headline. Alibaba shares are tumbling after a $10.2 billion discounted AI-focused placement, plus the exit of investor Michael Burry. The market read is pretty straightforward. AI spending is still the growth story everybody wants, but discounted equity raises bring dilution into the room, and dilution is the dinner guest nobody invited. Why it matters beyond BABA, this hits Chinese tech sentiment, and it also feeds the broader question hanging over AI names. Not is AI important, but what does it cost to chase it, and who pays for it? Coming up, we kick it back to the movers board. Then we've got that BGI deep dive on the rundown.
Thanks, Macro Desk. Quick small cap momentum hit, BMEA on the 1 minute. Oof, look at that push. This opened around $1.49, chopped flat, then bang. Volume hits at 151 and rips it straight through 160. That's the move. Current tapes around 172, high of day 174, and buyers have been defending that 167, 168 higher low shelf. I don't have a VWAP print in this data packet, so here at the markets desk, I'm using the actual tape line. 167 is the hold. 174 is the trigger. Above that, it's real continuation pressure. Below 167, this starts looking like a biotech momentum trap. Okay, catalyst check. This morning's headline is Trial Enrollment Completion in the Covalent 211 Phase 2 study for icovamenib in insulin-deficient type 2 diabetes. That explains why a sleepy 149 open suddenly woke up. Volume's already about 4.5 million shares versus roughly 1.3 million average. So yeah, participation is there. But don't ignore the other side. This is a $1 biotech, market cap around 122 million, float about 65 million, and the dilution page is flashing high risk. Active shelf, active equity line, over 180 million raised in the last 12 months. So clean read, 174 above, 167 below. Momentum is real so far, but this is not a name to treat casually. All right, Markets Desk is going right back to the movers board. Fresh prints, fresh levels. And yeah, this board is still wild, while QQQ is down about 1%, so these are not market beta moves. DIC is still the monster number, up 294%, but price has slipped to 1.68. That's under the earlier 1.80 danger line, so we've got a scorekeeping moment. S-Dot still huge, up 110% around 27.64. XPON right there, up 108% around 7.15. BTCT, ridiculous turnover, up 100% with 124 million shares. This is a board where the percentage move is loud, but the level has to confirm it. Let's pull DAIC first, because this one is losing altitude while still wearing the number 1 badge. DAIC at 168, up 294%, 15.4 million shares, 5.7 times relative volume. Float is about 14.9 million, so it can move, but the dilution tag is high, and the company sits in that shell company bucket. So the Markets Desk treats every pop here like a risk management problem, not a victory lap. The earlier 180 line is gone for now, so eyes lower, watch 165. If sellers keep pressing it below 165, oof, the bounce attempt starts looking messy fast. Right now, under that prior 180 area, with QQQ heavy in the background, this is not clean momentum yet. It's active, it's tradable on the tape, but clean, not yet. S-Dot next. Pull up the 1 minute, because this is the cleaner momentum check after DAIC. SATOT's at 27.63, up about 110%, and the volume is real. 22 million shares, 30 times relative volume. So, the question is not, is it moving? Obviously it's moving. The question is whether this post-breakout trade is actually holding the high 20s, or whether every push up there is just throwing nasty topside wicks. For me, 28 is the first grade. If it can keep building above 28, that tells you buyers are still accepting the higher range. If it keeps popping and snapping back under 27, that's wick risk. Sellers showing up right where late momentum wants confirmation. And yeah, high dilution tag on SDOT too, so great liquidity today, but I'm not treating that as a clean small cap tape, unless the bid keeps proving it. Now, XPON. This one's all about the $7 area. XPON 360 is at 715, up 108%, with 48.2 million shares traded and 47.8 times relative volume. That is a monster liquidity event for a roughly $6.7 million market cap name. On the 1 minute, I'm grading 7 as the pivot. If candles compress sideways above 7 instead of instantly leaking, that's base building after the breakout. If it loses 7 and then 6.80 starts getting hit with volume, that's where the move starts looking more like exhaustion than continuation. And with that much turnover already, don't just stare at the percent gain. Watch whether new volume is still pushing price, or whether it's just churning in place. BTCT now, and this is the volume monster on the board. BTC Digital at 228 up basically 100%, but the wild number is the turnover, 124.7 million shares on an 8.97 million float, and over 1,000 times relative volume. That is not normal traffic, that's full-on churn. So on the 1 minute, I'm not chasing the headline percent. I'm watching whether volume is still showing up on the dips. The downside line for me is $2. If this thing starts living below 2, that's where the clean momentum story changes from controlled pullback to okay, now the crowd is trapped. Above 2, it can still be sloppy and alive. Now, flip it to FLZH, because this is the other side of the board. Not a momentum rip, this is crash chart stuff. Flash Sports is around 26 cents, down 73.5%, with 9.6 million shares traded, and the dilution tag on the board is high. So yeah, any bounce here has to be treated like a bounce until the chart proves otherwise. With names that get smashed this hard, you'll often see these sharp little green candles that look amazing for 30 seconds. and then they just fail right back into supply. $0.25 area matters psychologically here, 25 cents. If it can't hold that, the bounce crowd gets uncomfortable fast. If it reclaims and holds above it, then at least you've got a line to measure against. But this is absolutely bounce trap territory. Okay, last rotation here. Healthcare names first, and Lucy is the cleaner liquidity story. This thing's around 1.00, up 47%. But look at the share count traded, 127 million shares on a float under 6 million. That's real turnover. The line is super obvious. If it's living above that $1 area, bid pressure is still there. If it starts losing one and can't reclaim, that's when these small caps can get slippery fast. Now PMI, same sector bucket, different tape. Picard is 4.68, up 46%, but only 14 million shares and about 7.4 times relative volume. So it's moving, yeah, but it's not the same fire hose as Lucy. For PMI, I'd rather see it hold the mid-4s and keep building toward 5 before calling it real continuation. Quick speed filter through the bottom names. DFNS is the laggard, down 44%, and the volume is not matching its normal pace, so that's more of a broken chart watch than a clean momentum trade. RITR is the penny volume machine, 11 cents up 33%, almost 298 million shares, 516 times relative volume, but that's exactly where you keep your guard up, because dime stock liquidity can flip from liquid to trap in one candle. And CYPH is the quality check near $2, 1.82, up 28%, healthcare name, but relative volume is under 1, so I'd want to see it actually reclaim and hold 2 before treating it like it's joining the stronger group. Alright, that's the scan. DAIC and BTCT were the chaos leaders, Lucy had the cleanest healthcare liquidity, and we'll keep those levels live as we flip back into the broader tape. Alright, quick BGI deep dive. Because oof, look at this wick. This is Burke's Group, tiny luxury goods microcap, trading around 30 cents now, down about 13%. But the volume is wild, 3.7 million shares versus a 36,000 average. That's over the float already. Float's about 2.85 million. So this is not sleepy tape. It opened around 36 cents, squeezed hard through 38, tagged 53 cents, and then just got absolutely rug pulled back under 40. Classic parabolic spike, classic fade. Right now the markets desk is scoring this off 2 lines. 30 cents is the base test, and 38 cents is the repair line. Below 30, this thing is living at lows. Above 38, then you can say buyers actually took back part of the breakdown. Until then, it's just churn near the bottom of the range.
Thanks, Markets Desk. Quick top of hour reset here from the macro desk. It's 11:05 Eastern on Monday, August 24th, and the tape is heavy, but not disorderly. SPY sitting around 763.2, down about 1/3%. QQQ is the weak link at 705.4, off 1.12%, so the pressure is still concentrated in the growth and mega cap lane. IWM's down about 0.5% at 298.4. And VIX is actually a hair lower at 18.89. That's the tell. Stocks are red, yeah. But volatility is not exactly kicking the door in wearing boots. This is more controlled de-risking than full-on panic. The big story is still event risk meeting macro nerves. NVIDIA earnings are the elephant in the AI room. NVIDIA's basically the mood ring for that whole trade. And with QQQ already under pressure, everyone's watching whether tech buyers defend this 703 to 706 zone or just keep lightening up. Cross-asset, it's a weird little cocktail. Bonds are bid with TLT up 0.66% and IEF up 0.22%. The dollar proxy is firmer at 27.955. Yen is a touch weaker. Gold is up nearly 1% at 427.50, and oil is down almost 2% around 132.04. So the message is some defensive demand, less oil panic premium, and tech valuation stress all at once. Very tidy, very normal. Markets, of course, prefer to serve breakfast as a 6-asset casserole. For the next hour, I'm watching QQQ 703 on the downside, 706.5 on the upside, USO around 132, and the 1230 Chicago Fed Activity Index slot, estimate 0.1, our feed shows negative 0.08. Coming up, we'll kick it back toward the market mover scan and see which single names are ignoring this macro soup.
All right, let's reset the movers board. QQQ is still heavy, down about 1-1. So if a small cap is green today, it better be doing it with real volume. Top of the board, DAIC still the monster, up to 80%, but now 162 and sitting under that 165 fail line. XPON is still over 7, up 107 with almost 50 times relative volume. SDOT, oof, up 102 but 2670. That's under the high 20s acceptance zone we were watching. BTCT is the ridiculous liquidity name, up 100%, 128 million shares, 1050 times relative volume. And FLZH is the crash chart, down 73% just above the quarter. Scoreboard is nice. DAIC first. Pull the 1 minute up, because this is where the headline number can lie to you. It's still up 280%. Massive. 16.8 million shares, 6.27 times normal volume. Float around 14.9 million. But here's the problem. Price is 162, so that 165 line is overhead now, not support. That's a big personality change. If DAIC reclaims 165 and starts holding above it, okay, then the tape is at least trying to stabilize. If it keeps accepting below that, this can turn into a stair-step fade real fast. And the data panel has high dilution risk on this thing. Plus, it's listed as a shell company name. So yeah, giant green candle, but don't romanticize it. For me, 165 is the reclaim line. Under 160, the momentum crowd starts getting tested. XPON next. And this is the one where I really care about that $7 line. It's sitting around 712, up about 107%. But the important part is the volume. Basically 50 million shares, 49 times relative volume. So yeah, that's not sleepy. The question is 7 actually support, or did we just get one squeeze candle through it and now everybody's chasing the top? If these 1 minute dips keep tagging that 7 area and immediately getting bought, okay, then you've got real absorption. If it starts accepting below 7, not a 1 second wick, I mean candles closing underneath it, then the character changes fast. Because this is still a tiny industrial name with dilution data on the board and a medium risk tag. So for me, 7 is the pivot. Above it, bulls still have control of the tape. Below it, you stop treating it like clean momentum and start asking if the squeeze already paying people. Now, SDOT. This one's way higher priced, way whippier, and the battle is still that high 20s zone. Stocks around 2670, up about 102%, 22 million shares, 30 times relative volume. The danger here is the wick risk. You can see it when it punches into 27, 28, maybe above, and then sellers slam it right back down. That tells you the headline move is real, but the acceptance is not guaranteed. I want to see whether buyers can reclaim that 27 to 28 area and actually live there for a few candles, not just print it and reject. If 28 becomes support instead of resistance, totally different look. But under 27, especially if the candles keep closing heavy, then this is just a high volatility auction with a high dilution risk tag sitting underneath it. Fun chart to watch, but you've got to respect how fast those wicks can turn into rug pulls. BTCT now, and yeah, this is the wild one on liquidity. Stocks around 2.28, up basically a double, but the crazy part is the tape. 128 million shares, and relative volume over 1,000 times normal. That's not a typo. For a minor type name, that means everybody found it at once. So on the 1 minute, I'm treating 2.28 as the live pivot. If it keeps accepting above that area, fine. The momentum crowd is still in control. But if it starts stuffing candles under 2.28 after this much volume, that can flip fast because there's just so much churn already done. Also, high dilution risk on this one, so don't get hypnotized by the percent gain. The tape is tradable, but the structure can get nasty quick. FLZH next. Total different personality. This is the crash chart, not the squeeze chart. It's around 26 cents, down 73%. And the only question here is whether that $0.25 area is a real base or just a pause before another flush. Volume's almost 10 million, so there is activity, but I'm not giving this the same respect as a clean gainer holding VWAP. This is bounce attempt versus trap territory. For me, that 25-cent line is the tell. Above it, you can at least see dip buyers trying to stabilize it. Below it, that bounce gets very suspect. And again, high dilution risk on the board. So with a name like this, you've got to assume overhead supply can matter. Lucy now, a nice little scoreboard moment here, because that $1 call out got hit. Stock's around 1.03, up 51%, and the volume is just nuts. About 129 million shares on a float listed under 6 million. So yeah, this thing has recycled a ton of stock today. The new tell for me is 1.03. It's basically sitting right on it, not a mile above it. So if Lucy can keep holding above 1.03 after that $1 reclaim, that's still active momentum. If it starts losing that area and $1 turns into resistance again, totally different story. Then it's just another small cap round trip attempt. Medium dilution risk on the board too, so don't marry these things. Last one, AMCI, loser check. This is the robotics name, but the tape is not giving you that same participation at all. It's around 4.86, down 25%, and only about 162,000 shares with relative volume at 0.04. That's the opposite of the Lucy BTCT type action. So if you're scanning downside names, this is thin downside tape. Not big panic volume, not a real bounce attempt yet, just weak and kind of quiet. Especially with QQQ still heavy, I need to see buyers actually show up on volume before calling this anything more than a dead cat pause. Alright, movers board is set. Let's flip back to the broader tape and see what's driving the next wave.
Thanks, Markets Desk. Breaking now from ProTerminal. U.S. equity futures are under pressure ahead of the Treasury Secretary briefing and NVIDIA earnings. What we know, the equity bid has softened as Treasury yields stay jumpy, and investors are waiting for a policy announcement plus NVDA's print. What we don't know yet, the actual briefing details, the tone, and whether NVIDIA's numbers backstop the AI trade. The live read is pretty clean. QQQ is the weak sibling at 705.4, down 1.12%, while SPY is only off 0.36% at 762.9, and VIX is basically asleep at 18.93. So this is tech and event risk pressure, not the market running around with its hair on fire, at least not yet. Next up, the long bond is back in the starring role because apparently the 30-year Treasury yield wanted a character arc. ProTerminal is tracking rising long-term yields as the key pressure point for equities. Higher discount rates hit long-duration growth first, but they also squeeze utilities, real estate, anything priced like money stays free forever. The tradable proxies are actually calmer this morning. TLT at 82.60, up 0.66%, IEF at 93.03, up 0.22%, so the intraday bond tape is not screaming, but the market is absolutely watching the long end as the valuation governor. Third headline. Alibaba shares are getting hit after a $10.2 billion discounted AI placement, and the desk is also tracking Michael Burry's exit from the name. The fact pattern matters more than the celebrity name. A discounted placement brings dilution questions, and in a tape already twitchy about AI spending, investors are marking down anything that looks like expensive funding. The read-through is China tech and AI infrastructure broadly, not because Alibaba and NVIDIA are the same trade, they're not, but because this market is asking one question everywhere. Who can fund compute without punishing shareholders?
Thanks, Macro Desk. All right, Markets Desk is jumping straight to the movers board. QQQ's still down a little over 1%. SPY's red, IWM's red, and somehow this board is still throwing absolute fireworks. DAIC up 360%. XPON up about 140. SDOT doubled. BTCT doubled with a ridiculous relative volume print, over 1,000 times normal. Oof, that's not a normal Monday tape. Also, keep the loser row in mind. FLZH down 73%, so the board is not just squeeze city. We've got real trap risk out here too. Let's start with DAIC, because this is still the headline name on the board. Price is sitting around $1.97, up 361%, 21.5 million shares already, and about 8 times relative volume. Here's the thing. For a shell company type name with high dilution risk, I don't care how pretty the green number is, the tape has to keep proving itself. $2 is the clean magnet right now. If DAIC can actually accept above 2, that tells you momentum buyers are still leaning on it. If it keeps rejecting there and sliding back under the prior support zone, then this turns from squeeze to unwind fast. So for the market's desk scoreboard, DAIC above $2 is the next quality check, not a victory lap. Now, XPON, this one deserves the scorecard moment, because that $7 level we flagged earlier did get tagged and then some. We're up here around 823 now, up about 140% on the day, 52 times relative volume, so yeah, this is not quiet tape, but this is where it gets tricky. After a move like that, I'm not chasing the green candle. I'm watching whether $8 becomes real support or whether it's just a blow-off wick above the prior push. If buyers keep defending 8 on the 1 minute, fine. That tells you momentum is still being respected. If it starts accepting back under 8, that's where these low-float industrial runners can turn into a nasty air pocket fast. Huge volume, tiny market cap, medium dilution flag. Fun chart to watch, but this is absolutely a levels-only name right now. Next, and this one's cleaner in a different way, because it already showed you where sellers cared. It pushed into that 27 area, failed it, and now the whole read is basically, do buyers reclaim 27, or does this double plus move start fading back into the body of the day? Stock's still around 2680, up 100%, 31 times relative volume, so the headline move is still huge. But relative to XPON, this is a higher price squeeze, and when they lose those whole dollar breakout areas, the candles can get wide. I'd want to see it stop rejecting near 27 before calling the tape healthy again. If it keeps printing lower highs under that zone, that's the first sign the move is shifting from continuation to distribution. BTCT now, and this is the wild stat on the board. Not the biggest percent move, but the relative volume is ridiculous. Over 1,080 times normal volume. 132 million shares through a name that usually does about 122,000. That's not a typo. Price is sitting right around 230, up about 100%. And this is the Bitcoin mining angle. BTC Digital, mining hardware, mining operations, all that crypto-adjacent flow. The key for me on this one is whether 230 stays sticky. If it keeps accepting above that area, the tape is still liquid and active. If it starts losing 230 and the candles get heavy, that's where these can turn into a volume air pocket really fast. Now, flip to the loser side for FLZH, because this is the other kind of speed you have to respect. This thing's around 26 cents, down 73%, almost 10 million shares traded, and yeah, it can bounce, but that's a crash chart bounce, not clean momentum. The difference matters. When something's cut by 3/4 in one session, you're watching whether buyers can actually build higher lows or whether every pop just gets sold into. So on FLZH, I'm not treating green candles the same way I treat them on BTCT or Lucy. Around 26 cents is the battleground. Above it, maybe you get a reflex bounce. Under it, this can just go right back into dead cat fade mode. Healthcare rotation check now. Lucy first. This is one of the better liquidity names left on the gainer side. Around $1.02, up about 49%. And the big thing is the share count moving through it. 130 million shares traded against a float listed under 6 million. So yeah, that's real participation, but it's also a ton of churn. The clean line here is psychological, that $1 area. Above it, the momentum crowd at least has something simple to lean on. Under it, this can turn into chop really fast. Now PMI is also green in healthcare, but it's a different animal. 450-ish, up 40%. About 15 million shares traded. Relative volume just under 8 times. Good move, but not the same squeeze-style liquidity as Lucy. Bigger listed float, recent filings on the profile, and the follow-through quality matters more than the headline percent. If PMI keeps accepting above 450, that's constructive. If it can't, I don't want to pretend it's the same tape as a true volume monster. Alright, last two to clean up. Ritter first, because this is the extreme penny volume name. 11-cent stock, up 31%, and the volume number is just silly. Over 300 million shares, more than 500 times its normal pace. So yes, there is real liquidity on the tape today, but at 11 cents, the risk is completely different. Spreads in percentage terms matter, dilution risk matters, and that 10-cent line is the danger zone. Once names get under a dime, things can get ugly fast. Now AIFU is almost the opposite setup. $23, up 26%, but only about 23,000 shares traded. That's not the same kind of move. That's a thin, higher-priced gainer where a handful of prints can make the chart look dramatic. So I'm separating that from DAIC, XPON, BTCT, Lucy, the names where the volume is actually telling you traders are piling in. Good movers board today, especially with QQQ still red. We'll leave the noisy prints in their own bucket and roll forward into the next hit.
Thanks, Markets Desk. Quick news brief here at the macro desk, and the top cross-asset headline is gold. We're tracking bullion up around $4,650, holding near a 3-month high as U.S. fiscal worries keep the safety bid alive. That matters because this isn't just a shiny rock story. GLD is up about 1.3% on the session. Bonds are bid too, and when gold and duration both catch a bid, the market is basically saying, "Cool story, Washington. We'll just sit in the bunker for a minute."
All right, that's it from the markets desk for this run. Scoreboard check. Lucy threw a buck hit. XPON threw 7 hit. S. Under 27 hit. DAIC 2 and Lucy 103 are still live. No victory lap there yet. Respect the tape